Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TIANJIN Capital Interim Report. TIANJIN Capital Environmental Protection Group Company Limited offers a diverse range of services and products to support environmental protection in China. The company provides wastewater treatment, recycled water supply, energy cooling, and heating, third-party governance, business sludge treatment, hazardous waste treatment. Additionally, the company offers environmental technology, products and services, customized environmental protection equipment, facility construction and management, entrusted operation of facilities. The stock price of TIANJIN Capital Environmental Protection Group Co., Limited has increased by 31.49% over the past year due to a combination of factors. The company's strong half-year financial performance in 2025, with a net profit attributable to owners of RMB 472.9 million, was a significant contributor. Additionally, strategic project developments and business expansion initiatives, such as the commissioning of reclaimed water ancillary facilities and the completion of a RMB 7.3 billion acquisition of renewable energy assets, have also driven growth. The company's quarterly profit growth, dividend proposal, and corporate governance efforts have further boosted investor confidence. The unveiling of a digital carbon asset management system to coordinate emissions trading among subsidiaries has also been well received by investors. Overall, the positive developments in financial performance and strategic project execution within the growing environmental protection sector have driven the significant increase in TIANJIN Capital Environmental Protection Group Co., Limited's stock price over the past year. The primary drivers of revenue growth for a company can be identified from its financial summary. The main operations revenue increased by 2.12%, while specific business segments such as heating and cooling supply, tap water and water plant facilities construction, sewage water processing, and recycled water and auxiliary projects also saw significant increases in revenue. On the other hand, hazardous waste treatment and sewage water processing and water plant facilities construction were the primary drivers of revenue decline, decreasing by 32.9% and 10.3%, respectively. The Tianjin segment experienced a notable increase of 44.6% in revenue, while the Hangzhou segment saw a decrease of 35.4%. Overall, these figures indicate that the company's revenue growth is largely driven by its main operations and specific business segments, with some decline in hazardous waste treatment and sewage water processing. Net income and profit margins. A shift in fortune, the net income of the company underwent significant fluctuations between periods. Initially, it increased by Yen 30 million from Yen 460 million to 490 million due to the reversal of credit impairment losses and recognition of gains on asset disposal. However, this trend was short-lived, as it decreased by 0.6% from 271 million to Yen 270 million in a subsequent period. Profit margins also experienced changes, with operating profit margin increasing from 25.6% to 26.8%, while net profit margin rose from 20.7% to 22.5%. Conversely, the operating profit margin increased from 39.7% to 40.5%, but the net profit margin decreased from 34.2% to 33.8%. The reasons behind these changes are multifaceted. The reversal of credit impairment losses and recognition of gains on asset disposal contributed significantly to the initial increase in net income. Additionally, lower non-operating expenses from late payment penalty payments also played a role. However, the decrease in net profit margin can be attributed to various factors, including government grants recognized in current profit and loss, and other non-operating income and expenditure. The company's financial performance indicates a positive trend in its operating cash flow. The data from various pages confirms this, with net cash flow from operating activities increasing by 17.96% on page 6 and consistently showing positive values across multiple pages. Pages 15, 16, 70, 159, 184, 206, and 213. Additionally, the company's total assets increased significantly, suggesting sufficient cash to cover interest expenses. This evidence supports the conclusion that the company is generating positive operating cash flow. The company's financial performance varied across different regions and segments in 2025. Notably, beautiful cities, green and low-carbon cities, city environmental protection markets, construction and operation of environmental infrastructure, and consulting services all performed well, with significant increases in revenue. On the other hand, Tianjin was a poor performer, with operating activities decreasing by over 7 million RMB compared to the previous year. Additionally, sewage treatment plants in Hangzhou and other locations also underperformed, although specific data was not provided. Notable changes were observed in various expense categories, including repair and maintenance expenses, traveling and business entertainment expenses, board of directors expenses, and others, which all decreased by significant percentages compared to the previous period. The management of the company is emphasizing a strategic shift towards improvement and expansion. Key initiatives include upgrading existing assets, investing in new projects such as the Xi'an sewage treatment plant upgrade project, and exploring new markets. Additionally, the company aims to revitalize its operations through organizational restructuring and digital transformation. These efforts are expected to boost market value by widening financing channels and promoting investor relations management. The company has made significant acquisitions in recent years. Notably, an asset transfer agreement was signed with Tianjin Sewage Company to purchase assets generated from foreign bank loans. Additionally, the company has engaged in business combinations not under common control, although specific names are not mentioned. Unfortunately, there have been no divestitures reported during this period. The company has a history of paying dividends to its shareholders. This can be seen through various mentions in the financial summary, including a detailed list of dividend payments from 2020 to 2024 on page 35, policyholder dividends mentioned for half years of 2025 and 2024 on pages 7-72, confirmation that dividends. Yes, on page 97, a closing balance in the dividend payable section. On page 163, there is no mention of share buybacks throughout the provided pages, indicating that the company has focused on paying dividends to its shareholders. Concerns about inventory buildup or supply chain disruption exist. The company's financial summary reveals concerns regarding inventory buildup and supply chain disruption. Notably, inventory write-downs were made due to lower net realizable value, indicating that some inventory may be obsolete or difficult to sell. Additionally, raw materials and goods in stock balances increased from opening to closing balance, suggesting a potential accumulation of excess inventory. Furthermore, there are signs of supply chain disruption. Cash paid for goods purchased and services received decreased by $23 million, which could indicate issues with suppliers or logistics. Moreover, raw materials consumption decreased significantly compared to the previous period, suggesting that the company may be experiencing difficulties in sourcing necessary materials. These indicators suggest that the company is facing challenges related to inventory management and supply chain efficiency, which may have significant implications for its operations and profitability. But that concludes the financial summary for Tianjin Capital. Feel free to comment below, and I will be happy to answer them when possible.